Hey traders, Nick Shaheen here looking at Skillz. Let's see, pretty violent stock to say the least. Let me start this by saying I don't hate it. In fact, I went long it and shared it with members on the 25th with a couple of caveats. So there you go. I am not a hater. The message today is very, very, very simple. If I got long Skillz and this happened to me, and this pop fixes my position and gets me some greens, personally, I would count my blessings and get out. Thank you very much for the recovery, miracle recovery. Let me backtrack and tell you what I'm thinking. So first of all, I'm not an expert on the company. So when I wrote it up and shared it in a video that was private, I said, caveat, I don't know the company, so I'm leveraging somebody else's homework on it. And it's ARK, because that's how it came to me. Hundreds of members, everybody's interested in what's ARK doing. So I said, if it's good enough for them, it's good enough for me fundamentally, so let's trade the chart. And when it fell into here, the markets were also tripping. I said, it's falling into prior support. Therefore, this cluster should matter. And it did for one day. And then it proceeded to go down the flat and then woo. So when I suggested a long, I provided a table with 4 different ways of getting long. Selling puts or put spreads, those were fine. Buying calls or call spreads, those were not fine. They're fine now, but took heat. And buying shares, of course, it's always available. So in the video, I specifically stated, because this is a wild stock and I don't know it and I'm not comfortable with how expensive it is from a price to sales perspective, I would stop out immediately. Those were my exact words. I would not give it any leash. If it turns on me, I'm out. And let's assume somebody did not get out. They got stuck. This is a message to them to get unstuck. This is a gift, 70% in just a few days. The other caveat during the video when I suggested a long back on 25th March is that if I get a pop, I would get out quickly because I fear them going up and facing the selling pressure that they were going to face, that I was confident they were going to face, and them drawing and triggering. So this whole debacle, they triggered a bear right here, which they priced out. They should have gone further down, but they didn't. So there was a neckline that was lost somewhere around here. So my fear was that the bounce would draw another neckline somewhere around here and would have some devastating consequences, and indeed it did. So here were the lines I drew for that video. I said, you do not want this. And that's what happened, only with a micro pop. This is like weep, and then this happened. So I put it down here. Okay, they did better than I expected, but not a fun ride. I don't remember when I put these lines. I know why I put them there, but look how pivotal they've been. So we know our levels, that's for sure. And here's my note. I added that recently, I think. Not an easy recovery. No, I did not. That was at the time as well. I can double check that from the video. But anyway, so this was the neckline lost in the beginning. And then this was the result of it. I was hoping they would stop here. They didn't. This fixes whoever did not stop out. So that's the point of the video. But here's the twist. This little guy. So earnings are coming. So this is where management can come out and say some great things. What I know about what they do and the arena they play in is pretty exciting. I mean, who can poo-poo that now? It's like telling Amazon when it sold books that it sucked as a company and shorting it because of it. There's no way. There's just too many unknowns and so many ventures they can go on that it's not shortable. But from a trading perspective, the right thing to do is to get out when you get a gift like this. This is not a recommendation. This is what I would do in my hands. So what about the earnings? A lot of us still believe that, not me, a lot of you still believe that the earnings matter for the short term. They don't matter. I know sacrilege, yes, but the reaction short-term reaction to the earnings is arbitrary. Proof, look at Microsoft. They reported earnings after hours today, and the stock is down a little bit. The fact that it's down at all when they crushed last year's numbers and beat the earnings and they didn't warn on going forward basis is proof positive that they should have popped, but they didn't. They dropped. You say it was a fluke. It's not. Look at Microsoft's last 4 reactions. They had 1 pop, 3 drops. I can't even remember the last time Microsoft had a bad report. So if all of its reports are good and the reaction is based on the reports, why aren't they all pops? They're not. They're a coin flip. We don't know what the mood is, what the expectations are, what the market maker is going to do. They rig the markets. Everybody knows that. And so short term, it's guessing game. So this could be good for this company. Maybe they say something that just sways sentiment, because sentiment was shaken. They had the presence of mind to buy it with force. If you give me my choice, I would have had them stop here at least once. But it's okay so far. They are going to face sellers. Let me show you why. For the same reason it found support. Exactly the same reason. For the same exact reason it found support. So the struggle was down here way back then, right? Struggle, I put that in quotes. And then the breakout happened back in December. They stalled here. So this was a contentious battle. So let's draw a line. Sorry about this. It's a long day. I'm on the West Coast, so I'm up in the 4s every day, and I don't go to bed early. Look, there are no coincidences in this world. If you still don't believe in charts, let this be proof again that charts do matter. All right, so base, breakout. They come back to test the neckline. They don't even come close, so they based right here. You can see all these wicks, and then struggled here temporarily. Meanwhile, they spent all this time chop, 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 consolidation. That's what Wall Street calls it. So when a stock runs this much and chops this way and then breaks out from this chop, it runs as much at least of where it came from. So it depends on what you consider the pole. They're going to do like an ABC type of a deal or flag, whatever you want to call it. So they did the thing, right? And then they chopped a little bit here and they did the thing. On the way down, they tried to stop where they chopped. They did. They came back to it and lost it, gave up the ghost. Look where they stopped again, into the chop. They did, and then they came back and they gave up the ghost. They tried again at the guts. This is the point of control now. We'll talk about that in a second. So this cluster is super important. They should have stopped here. They should not have gone here. But it's okay. It's not completely egregious. So what's best for them is to chop here, let management give them good reason to get out from here. That's the proper way to recover out of this one. But I can guarantee you under normal circumstances, if you take this out, there's going to be sellers here. And that's normal. The way you put a bottom is you establish you don't make a lower low, which they did not, and you make higher lows, and you attack this descending hideous, oh my God, the straight lines already, transition of get out from under this lower high trend. Higher lows is okay, but first you have to stop making lower lows, which they did. Higher lows is good. They come to a point and boom, they break out. Boom, they break out. So let's take some of these lines out and then talk about what's the ideal levels to look at. So clearly this level here, the orange line, I did not draw it. It's automatically drawn by a long shot. This is the busiest spot. What's busy? All these bars, their volume, right? This tells me where they happened. Most of them happened around 1385. That's the busiest point by a mile. This is the second busiest and third, second and third. So it shouldn't be butter. It should be sticky somewhat. Here, look, I'm going to put here, look left to the penny where they struggled, then based out of. I bet you if I do this, it'll mean something before that. Close. This one came close. All right. So hopefully this sheds a little bit of light. I'm not like opposed to the stock at all. I started it by saying I was long and I realized it and I got out, but somebody that didn't get out got a gift. I would get out if I was still stuck in it, just in case. So stock replacement. If you just trade stocks and you're worried about a certain period of time, there are ways to replace the risk of being long stock with being long using options with no money out of pocket, so to speak. And the worst that can happen is end up buying the shares lower. So consider scenario A, I buy shares and I own them at 20 bucks. The stock falls 10%, 20%, I'm out 20%. The stock replacement strategy would say I would get rid of my shares because they're $20 times 1,000 shares is 20,000 if I wanted 1,000 risk. So if it falls, I'm risking 20,000 times whatever percent it drops. Versus using options, I would take back my 20 grand and sell a put down below, get money for that, and buy a call with it out in time, or a call spread or whatever. So now I'm long with no out-of-pocket expense. So what could happen? It could rally and I'm profiting with no money out of pocket, no 20 grand on the line. Worst case scenario, it falls and I end up buying the shares because of that put I sold. The money I spent on the calls would die, but that's fine. It didn't cost me anything because I bought the put. I sold the put, collected money for it. So they costed me something, but it's offset by the puts sale. But having sold the put means I bought the shares cheaper. So somebody that bought them here already lost 10, 20%. What is that? I don't even know. 30% of their money versus somebody that instead of buying them here, sold a put here, collected money for it, starts losing money down here. See what I mean? Starts losing money down here. Okay, so there's a scenario I should mention. Should I mention? I don't know. I'm afraid. Well, let's see. This is my first time doing the video on this one. What if, just what if, it loses 12.3? Da, da, da. Oh my gosh, I don't even want to put the line there. I can just imagine somebody like Hyliion coming at me. What if this is lost? Woo-wee. All right, so I won't say it, I'll just draw it. Uh-oh. So, major debacle. I'm not going to put it there. Well, I'm not going to say it. I put it there, but I'm not going to say it. Just be careful. Nick signing out.